All right, everybody, welcome back to Mad Money. So I want to kick this off by saying I appreciate everybody that's been showing me love. I had a lot of people at work today. We had a workshop come up to me and they're like, "Don't you have a YouTube channel?" All these things. And I'm starting to see a lot of love on Twitter and, with my increase in exposure with Palantir Weekly and just a lot of others. And it gets me buzzing. I'm just going to say it gets me happy. It keeps me enthusiastic about continuing to do these videos for you guys and help in any sort of way I can. Now, that to be said, do your own due diligence. Make sure when you're investing, it's for personal finance reasons. So you have to look at your own personal circumstances. My circumstances are likely to be different than yours. I've been doing this about 10 years. I have a decent portfolio set up, and I'm still very much in the long-term working sort of scenario, at least for the next decade or so until I kind of call it quits. So my portfolio is in a very different position than any of you guys, so keep that in mind. But it just gets me buzzing thinking about the help in any sort of way, shape, or form that I can shed light on some of these great companies. That said, do your own due diligence. That said, I want to get into Rocket Labs today. Rocket Lab 1Q earnings. Speaking of buzzing, I thought it was great. I think there's one caveat that I talked to my boy Cole about, and so we'll get into that. But other than that, revenue beat. And the big thing that I was watching specifically after revenue, which I knew kind of came in line, even though it said it's a beat, it kind of came in line for me. The big thing I was watching for was cash burn. And so there's obviously a lot of expenses associated with Neutron for capital. And there's obviously a lot of, break-even costs and stuff like that we're really trying to get down in the space systems as well as regular Electron, Photon area. And so with that, you saw about I think it was like a 35-ish, 36-ish $1 million burn. We'll get into that when we get into the investor presentation. But if you remove the capital expenditure associated with Neutron, it was only about $20 to $25 million of cash burn. And that's okay for me. And you kind of saw the same in the 4Q time frame. So highlighting why that's important. So if you're only at a $20 or so $1 million cash burn per quarter, we ended the year in 2022 with about $484 million in cash from a Rocket Lab perspective. We ended Q1 with about 450. Now you're probably going to say, Matt, that's more than $20 million. Yes. If you remove the capital expenditure that was going towards Neutron and you kind of just normalize for that, let's just take that $250 million that Neutron is going to take between now and the end of next year and put it aside and say, we only have $200 to $250 million left for operating expenditures and stuff of the like. That means we have 10 to 12 quarters left of operating run room without getting space systems and launch to break even. Now, I'm feeling that with cadence and also just continued efficiencies and continued just work and restructuring and efficiencies within Rocket Lab, and I don't mean restructuring from like a layoff perspective, but I mean more of like a just setting things up, maximizing efficiency sort of scenario. I feel like we're going to get to a place where the OPEX burn for Electron space systems is going to cease to exist, and you're actually going to start to see some sort of break even towards the second half of next year. That being said, that's going to be completely offset by the capital expenditures that are going on. So when you think of like an EBITDA or you think of like a free cash flow positive, you're still going to be very challenged for the next 2 years just based off of what's going on with Neutron. Now, that being said, there's a lot of other cool things within this investor presentation that had I kept my ear to the street, I would have probably not been surprised by. But, people like my boy Cole have their ears to the street a lot better than I am. And so pretty cool. But what I will say is from a cash perspective, and this is one of the reasons why I like Rocket Lab and chose it rather than some of the other opportunities that are out there, is they were well capitalized from the get-go. And the one of the things that scared me a little bit was the acquisition piece, and that burned a lot of cash in the 2021 timeframe. But now I've kind of started to see the benefit of having those opportunities. That said, well capitalized comparatively to Virgin Orbit, which is now defunct, and Astra, which is probably got about another 2 quarters left before something drastic sort of needs to happen with respect to them. And that coupled with what Peter Beck is kind of talking about in the investor presentations and the Q&A section, I think you're going to continue to see consolidation in the small launch space. So that being said, a lot more people are going to be pushed, and the backlog will continue to be pushed towards Rocket Lab. You have NASA, you have Space Force working with Virgin Orbit and Astra, maybe not exclusively with either of the two, but you had backlogs associated with those things, and those demands are not going to go away. So I anticipate with time, there's rumors around Amazon space constellations and many other space constellations, and who knows how long Astra is going to last. Coupled with the start of Neutron in the coming 2 years, it's just a very buzzing time to be involved in Rocket Lab. That said, of course, and we'll get into the investor presentation thereafter, do your own due diligence, right? I think is an opportunity to continue to see cash burn associated with Neutron, and that's going to be a drag on the stock. But to me, it's an opportunity as my portfolio grows to equalize that position within the portfolio. Say the portfolio grows by 10%, 20%. I'd love to continue to grow my portfolio position in Rocket Lab 10, 20%, right? And keep that as the same size as the portfolio continues to grow. So might even take some profits in some of these other positions and not say sell and exclusively put into Rocket Lab, but take a portion of those profits or take a portion of the capital invested in those opportunities and maybe move it over to Rocket Lab and maybe even increase the position size in terms on a percentage basis in the portfolio. But other than that, man, let's just hop right into the actual investor presentation and get after it. I thought it was a really good opportunity to look at it and, of course, share with you guys my thoughts. I thought Peter Beck did a really good job. So, of course, with this, always do your own due diligence, right? So, key accomplishments, man. There was a lot of them in Q1. And specifically, we have the 3 launches per se, but you really had the New Zealand launches, which were kind of getting involved. And then you had a cadence of being able to do a launch in New Zealand, and then within 7 days, do one in Virginia, which I thought was really cool. You also hit a milestone payment for Neutron with Space Force, which I thought was relatively awesome. And then not only from a launch perspective, which is the reason why I initially got involved in Rocket Lab, but now you have space systems, of which 18 spacecraft were put on 8 different launches. Not specifically Rocket Lab launches, but just overall 8 different launches and used in space. Now, those are things like solar panels, Photon, what have you. Maybe not specifically those things, but that portion of the business that's really also starting to kick into gear and generate some really serious revenue, which we'll see in the future. And you did see a little bit of backlog being offset. So these are the cool things that I like to see. You have different clients that are also coming back: Hawkeye, Capella Space, Black Sky. Black Sky, if you guys aren't familiar, is also a SPAC investment that was made by Palantir. So, like I said, 7 days between launches. I thought that was really cool. You have additional Capella Space with their first successful launch. They signed up for a little bit more, so that's pretty cool. And then you have the point where you're actually starting to get some of these tanks created for the Neutron moldings. So these are the tanks that you're kind of seeing here. And really, really cool. So with this, that's where they got the $24 million payment. You have the Archimedes engine development that they kind of talked briefly about in the investor presentation. And you also got some of the 3D printers associated with Neutron coming through. So really some good progress associated with it. Here they talked a little bit about the software, which is over my head overall. And here's another highlight specific on the 18 spacecraft and all the clientele they had on the 8 different launches just in 1Q 2023. And I thought it was pretty interesting to hear that obviously with small launch, just in general, that Rocket Lab is the only person yet thus far in the small launch space to launch anything in 2023. And to be honest, in a couple quarters, Astra hasn't launched anything since mid-2022. Virgin Orbit's obviously been struggling and is now defunct. Relativity, though, while they didn't get to low Earth orbit, did launch. So, things are heating up and consolidating as well in this space. And I think Peter Beck did a really good job in the Q&A section talking about that. The solar part of the business continues to see really, really good opportunities. So this is going to be something where they have upcoming missions for International Space Station, NASA Escapade missions. which the Escapade piece is part of Photon and stuff like that, kind of going forward, and when we go to Mars, and that'll be really cool to talk about in the future. But it's kind of over my head, and I haven't really done too much due diligence on that. So, what else does we have here? We have the Escapade mission study to Mars. Yeah, this is the Photon piece. This is kind of over my head, but it'll be the first time Photon's being used on a different planet. So that overall, you start to think like end-to-end solutions from a company perspective looks really good. Here we were probably 2 years ago thinking this is just a small launch company, has a successful rocket that started, going up into low Earth orbit in 2018. And here we are now being an end-to-end solution, where you have solar panels, different satellite opportunities, space systems that are actually going into space as well and generating a second occurring revenue stream. So other accomplishments, some of you guys might have seen the launch success of some of the weather satellites for NASA the other day. They have another one scheduled for later this month in May of 2023. So this is pretty cool, and potential for NASA also has a contract with Astra. If that continues to consolidate and go defunct in the near future, maybe some of those future launches will be consolidated and the backlog will increase for Rocket Lab as well. And then NASA added another mission. So it just continues to be something that it continues to go well for Rocket Lab in that perspective. Multiple launches kind of signed up here. And then this was another thing that I thought was really interesting, and I started to actually do some more research on it. So there was another provider for hypersonics that has kind of been continuously delaying. And so with that, they said, you know what, the Electron rocket, if you just change the trajectory and where you're pointing it, and you're going to be able to get 600 kilograms into space. Now, the normal payload for the Electron is about 320 kilograms. So if you just change the trajectory a little bit, you're going to be able to capture about 600 kilograms into space. And so this opportunity gives you a little bit more cadence. And so with that, you're still going to be launching things, into space, low Earth orbit, to be kind of like a little bit, maybe not, it's going to be suborbital, but, still close to orbit. You're still going to be paying a pretty decent premium. So regardless if it's Electron or HASTE, it's another market that you can capture. And just to kind of give people an idea, as the TAM, 44 billion is that sort of TAM for fiscal year 2024. And the anticipated 3-year compound annual growth rate is going to be about 14%. So that's going to grow another $4 to $5 billion over the course of from fiscal year 24 to 2027. So you're looking at, let's just add 15 to this, close to $60 billion in total addressable market specifically just for this. So now that you are able to capture that sort of market as well, just another opportunity and feather that Rocket Lab can put in their hat. And another piece towards what I was talking about in the second half of 2024, when things really start to break even in terms of an operating expenditure and cash flow perspective for the organization. That's just my interpretation. That was not Peter Beck's or Mr. Spicer's saying. That's just mine. You're going to start to look at engine reusability. So this is something we could look forward to in 3Q. And not just the engine itself. I think in the Q&A section of this presentation that they did for the 1Q earnings call, they talked about other components as well. And eventually, I think in the next year or so, we'll see entire rockets being reused. Now, whether or not they try to capture them with helicopters anymore, it seems a little bit unsafe, and so they've called it off in recent times. But being able to use rockets that have dipped into the ocean and refurbish them to turn around could be awesome. Now, one of the things that they did highlight in the 1Q earnings call was they anticipate, and these are not flown engines, but tested engines, that the ability to potentially reuse them have been done 13 plus times, and the engines still work as appropriate to be able to get rockets into low Earth orbit. So the thought process is when you reuse these things and you actually do fly test them, you might have the ability to reuse them on the order of 10 times or so. And so with that, you're spending way less on the ability and the OpEx to get these launch vehicles into space. And so I anticipate you'll see huge efficiencies being made, not necessarily until Q3 of this year, so 2 quarters from now, but from Q3 of 2023 to the end of 2024, around when we kind of get Neutron up and off the ground, I think that you'll see continued operating expenditure decrease. And so that expense or that cash burn that we were seeing of about $20 million a quarter will hopefully decrease as well. And whether or not it goes to zero is, beyond me, between now and the end of 2024, early 2025. But that being said, if it does decrease, that gives you a few more quarters, right? If it goes from 20 to 10, that doubles the amount of quarters that you have left, right? So, that might elongate the cash burn going from, let's just say, now until 2026, but at least it'll elongate and make that $200 to $250 million extra that's not going to be used for Neutron to go a little bit further. And that's really all we can ask for in the time being. Continued custom built Photon spacecraft, which is pretty cool. So we'll see this go into effect in 3Q ish or so, because they're not going to be able to get it done, it seems like, until either next month or the month thereafter. So the quarter is actually closing up here pretty quick for Q2. So that being said, likely that we'll see this Photon spacecraft go into orbit in 3Q. So that will be another opportunity in system. There is CapEx associated with getting these things up and running, and so this sort of satellite will be able to help, and the spacecraft will help decrease CapEx once these sorts of things kind of get finished and the equipment and set up and the facilities set up is completed with this, and it'll be more of a revenue stream with OpEx rather than CapEx. So it's a good thing. This piece was a little bit beyond me, but it seems like it's just another space system component here that helps with tracking. So be able to help in any sort of way, shape, or form to be able to help. And it looks like it's anything for satellite radios or 12 nanometer second reaction wheels. It's beyond me, over my head. I don't really get it. But getting into the actual financials, which is probably why you guys are here, 6% quarter-on-quarter revenue increase, so about $55 million. You could see a little bit more coming from launch than what we had in Q4. So about $20 million in launch, so still $6 to $7 million per launch because there were 3 launches in Q1. But Space Systems continued to do pretty well, $35 million in launch, Space Systems here. Big thing here that I wanted to highlight, the backlog did decrease slightly, but you think about it, they made about $55 million. The backlog only decreased by $9 million, so that was partly offset by some of the deals that they got. But they also hinted at some of the other, the other companies in small launch, or the fact that some of these other companies are taking longer to do things, which is resulting in like haste and stuff like that. Those deals are taking longer to close because they're bigger organizations, they're bigger companies. So whether or not you see a large spike up in backlog in the coming quarters associated with these closures, or the continued pressure that we're seeing on Astra or Relativity, if they don't continue to do well, which they were able to have a successful flight, but not a successful launch to orbit in the last quarter. If you continue to see consolidation in the space, this backlog will continue to decrease. So that's the hope that we kind of have here coming forward. But overall, relatively in line with what I was expecting. I think the outlook was 51 to 54 million, and we came in $1 million above the top line there. So the OpEx here is kind of a little bit what I was referring to earlier with respect to just the overall capital that you kind of have coming through. So $40 million or so in non-GAAP, or just over $50 million if you're looking at GAAP. That equates to negative cash flows, right, of 25 million, because obviously you have some revenue and you're actually making some margin off of that. And then obviously you have the capital expenditure associated with the Neutron rocket. So that being said, you have this $20-ish million, then you had $21-ish million kind of coming in for OpEx. My hope is kind of going forward that you're into this area where you have 20, maybe 25 million in operating expenditures shrinking over the next year or two as we continue to use reusability, as things become more old hat, and you're really relying on the space systems and the systems in place and the facilities in place to really come up to speed and have it continued efficiencies and make things a little bit better. And you're really going to start, hopefully, seeing this shrink a little bit, and that's kind of the hope. But this red piece is something that will eventually go away when Neutron goes away, but it's also inclusive of what's going on at Photon and any other property stuff, like the pad for Neutron is still being built and stuff like that. So, these things will slowly go away, but the thought is will Rocket Lab ever be done, right? The CapEx is always going to be there. Are they going to continue to invest? But for now, I'm really looking at this $450 million in cash, 250 of which going towards Neutron, $200 million of which is going to cash burn associated with operating expenditures, anywhere between 20 to 25 million, a kind of a quarter. And so that's really it. Looking at it from a Q1 perspective, the things that I really liked were really the piece specifically on talking about Haste, which was new to me, but not news to others, apparently. Good revenue growth, quarter over quarter. Continued launch. I was really fearful that we wouldn't get the 3 launches in 1Q, and it looks like we'll be doing the 3 launches as well in 2Q. And another thing is I think that somebody had told me that we were expecting 12 launches in 2023. Now it looks like it's going to be up to 15. But now I want to kind of highlight the one thing that kind of bothers me a little bit about Rocket Lab. But before I do that, let's hop into specifically the Q2 estimates here. So they're looking at $60 to $63 million. Revenue for space systems being 37 to 40 million. So as we'd expect, 3 launches here being about $20 million in launch revenue. As you can see, $23 million is kind of the estimate here. So about $7 million a launch. That being said, burn of about 55 to 57 in operating expenditures. And so loss of about 20, I assume, to 24 to 30 million in terms of OPEX, coupled with some of the CapEx associated with it. So I anticipate you're probably going to end up losing anywhere between $40 to $50 million in cash out of that $450 million that you're kind of using, just based off the fact that you're probably going to lose $20 to $25 million in operating expenditure cash burn, coupled with $15 to $25 million in the cash burn associated with Neutron. So it is what it is. But non-GAAP gross margins are looking better. GAAP gross margins are looking better. So with all this, you're making $60 million. You're able to get a little bit of it. So that offsets a little bit of that the cash burn that you're having at the end of the year. But then obviously you're offsetting more of that cash burn associated with it with CapEx coming in from Neutron. So the thing that bothers me, let's hop into that and then we'll call it a day, and I was having this conversation with Cole, so shout out to my boy Cole, keeps me honest. The thing that bothers me a little bit is the fact that cadence isn't going up as much, and the Q&A section that they said, or where they answered this, was, at least from a perspective of them, and what they said and answered with, was it was customer related. And what they mean by that is like, for now, it seems like Rocket Lab is creating rockets to be able to provide something on a cadence where, hey, if somebody doesn't show up or it needs to delay it by a month or 6 months, they have another opportunity to have another customer there. And so it seems like, hey, demand is there, but it's more of like the cadence is dictated by the readiness of the customers. To me, it's like you have so many different customers that are all launching constellations and things of the like that you would anticipate being able to launch, or the demand being there for more than 15 to 20 launches. Maybe I'm being naive, and if anybody has the sort of knowledge around it, let me know. But my hope is with Haste, that will be partly offset with having hypersonics and not going to orbit, but more than being suborbital launches for the Electron vessel, which is now the HASTE vessel. And then also the consolidation in the space. So they said they're going to go from 15 launches in 2023 to 20 in 2024. And here I'm sitting here being like, scratching my head, and I'm like, is that inclusive of some of these, just the backlog that we have at the moment? Is this going to include other consolidation in the space and things of the like? And then I'm truly curious about what the backlog looks specifically for Neutron. And one of the things that bothers me now that I'm kind of sitting here and thinking about it, and I kind of alluded it to earlier in the cash burn section, or maybe I was talking to somebody else about it, and it's not necessarily in this particular video, but it's on my mind, is yes, Neutron, the hope is late 24, early 25 that the vessel will launch. But you have to think there's other things associated with that, right? The first launch may or may not be successful. So assume you have 2 or 3 launches where it doesn't go to success. And then lastly, on that particularly, which could go on and down a rabbit hole, is that rocket is meant for reusability. And with that reusability, that's not going to happen on day one, right? Falcon 9, it took many attempts for it actually to be something where they landed. So we've seen what happens with relativity. We've seen what happens with Astra. We see what happens with some of these first launches. They never go to plan. So Neutron, I anticipate, while it might take $200 to $250 million to get you there, get the launch vessel ready, it might take another, 10, 20, $30 million, if not more, to test a few of these things. And how long will it take for reusability to really occur on Neutron? And at that point, what are the gross margins on that launch vehicle? Is the revenue from one going to pay for 2 launches? Is it going to pay for 3 launches in terms of operating expenditures, right? So, once you have one launch, is it still going to be cash burn out of the company's pocket? Or is the revenue going to be sufficient enough where it's in the $20 to $40 million range to be able to support, 1 or 2 rockets every time they put it up into space? So that's kind of my thought processes as of now. But that being said, I think that with the speculative nature of this company, I see more and more the speculative nature coming to a close. But that said, we're not out of the woods yet, right? I think that there's something that really needs to be said about the cash burn that's going on from an operating expenditure perspective, from a CapEx perspective. And while I'm very enthusiastic about the acquisitions that were done in 2021, I still think that might have been too quick, right? You might have acquired too much. And while it may have been prudent from a long-term view perspective, from a short-term, being able to make it through this sort of price environment that we're seeing right now, with money not being as free as it used to be, was it jumping the gun a little bit? I still feel like, from a glass half full perspective, this company will come out on top. I still believe it's going to be a 20 to 50x in the long term, 10 years, 15 years down the road. But it does have its challenges. And I think over the next 18 months to 24 months will be very telling, because at that point we'll have better ideas as to what's going on with Neutron. We'll have more of a full model of it. We'll be hopefully getting close to launch at that point, or at least line of sight to, is it going to be end of 24, early 25? And then you'll also have an idea as to how the cash burn is looking. Is it getting better? Is it getting worse? And then you could really start to say if we're out of the woods. But I think we're, even from being able to take a better judgment call, unless some stair step of efficiencies happen and operating expenditures and cash burn goes down in the next several quarters or so, which I don't foresee happening unless some of these efficiencies with like reusability and stuff like that really happen and come through. I feel like you're not really going to be able to make a new judgment call on this in the next 12 months. That being said, I feel like if you don't have a position as of today, it's something that you could wait on a little bit. But if you're somebody that just wants to make sure that they have their foot in the door, I think the price of $4 below $2 billion market cap is an okay price. Can it go to $1 billion market cap? Absolutely. Could this thing go to 0 in the next 5 years? Absolutely. We're not out of the woods. But that being said, if it's a small portion of your portfolio that you feel like you can endure the risk, think about it, right? Do your due diligence, talk to a professional advisor, and see if it's something that you can dabble in. But anyway, been rambling for about half an hour, 30 minutes or so, but I really hope this was useful. And yeah, I'll see you guys in the next one. Cheers.